Well, thank you. I'm going to be talking about the incredible recent rise of ESG investing. ESG stands for environmental, social, and governance. Um, Today, roughly $1 in 3 invested in the stock market is following some kind of ESG investment strategy. So my first question for tonight is, which do you think performed better in recent years? Green stocks or brown stocks? So a green stock is the stock of an environmentally friendly company. So think maybe a solar energy stock. And a brown stock is an environmentally unfriendly stock, for example, a coal stock. So which performed better recently? Well, green stocks massively outperformed brown stocks. Here I'm showing that a portfolio of green stocks outperformed a portfolio of brown stocks by 170 percentage points over the last 8 or so years. So next in our research, we asked, well, why did this happen? Why did green stocks outperform brown stocks? And our answer is that concerns about climate change increased over the last several years, and that benefited green stocks. What I'm showing here in red is our measure of the level of concern about climate change. This comes from letting a bunch of computers read a bunch of major newspapers and searching for keywords over the last several years. Concerns about climate change obviously have increased. The dashed line shows the return you would have gotten by buying those green stocks and shorting brown stocks. And you can see that the two series follow each other pretty closely. So what we show is that when people become more concerned about climate change, green stocks tend to outperform brown. And that makes sense. If everyone wakes up more concerned about climate change, what are they going to do? They're going to run away from coal company stocks, and they're going to run toward, for example, solar stocks. So that's our answer to the why question. The tougher question is, do you expect green stocks to continue outperforming in the future? This is an important question because when you survey investors on why they do ESG investing, consistently one of the top answers is they do it to get higher returns. It's also important because when you look at how asset managers market or advertise their ESG investment products, they advertise them saying that they have high returns. So our answer to this question, do we expect green stocks to continue outperforming? Our answer is no. Here's how we reach that answer. What I'm showing you here in blue is what actually happened. It's the actual return you would have gotten by buying green stocks and shorting brown. That strategy did perform very well over the last 8 years. Next, we ask a what if question. What if the last 8 years had been different? What if, for example, there had been no increases in concern about climate change? We can use a very simple statistical model to analyze that counterfactual. And what we find there is the dashed green line. We said, if there had been no increases in concern about climate change, well, the performance of that green minus brown strategy would have been much lower. If we further zero out the news green and brown companies got about their profits, we would have gotten this red line. So it's looking like the strategy performs even worse. And last, we note another thing that's been very special about the last 8 years is there have been huge inflows to ESG investment, mutual funds, and ETFs. So finally, we ask, well, what if there had also been none of these flows into ESG funds? And our answer to that is this bottom orange line. So again, blue is what actually happened. Green outperformed tremendously. But if you zero out all of those unexpected shocks, green stocks actually would have underperformed in recent years. So our answer to this question of like, why did green stocks outperform? Our answer is they got lucky. Okay, there were some unexpected shocks over the last 8 years, namely huge increases in concern about climate change. So it's not that they had high expected returns, they just got very lucky. So why should we care about this? First, we have an important message for ESG investors, which is you should not expect the strong recent performance of your strategies to continue in the future. What about for the planet? A little counterintuitively, it's actually good news that green firms are expected to underperform brown firms in terms of their stock returns. You have to remember that a company's expected return is the same as the company's cost of capital. What we're arguing in our paper is that green stocks have lower cost of capital. They have lower expected returns going forward. Since they have a lower cost of capital, that creates an incentive for all companies to become greener. It also induces green firms to expand their operations, and it induces brown firms like coal companies to shrink. So it induces more production of solar farms, and it induces fewer construction of coal mines. And it's through that cost of capital channel that ESG investing, we think, can actually have a positive impact on the environment. So thank you so much.